Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, US stocks are edging higher as those expectations of a US interest rate cut grow. And economic data in focus. We've got the second estimate of the US GDP figure and the Beige Book on deck. And pre-loved, Amazon is banking on second-hand sales in the UK and Europe to power its business. Now, not long now before Wall Street starts trading, just have a look here quickly on how markets are looking ahead of the opening bell. Just bring up the US 500 for you, and we are seeing a slight uptick there, not by much though, it has to be said. A similar story too for the US Tech 100, as you can see here. But let's have a check on Wall Street, which roughly mirrors the Dow Industrials. Wall Street, let's get you a minute chart to see what's happening there. And we can see that it is ticking ever slightly so higher. Treasury yields and the dollar also testing multi-month lows, and all this movement coming as investors really begin to accelerate bets that the Fed rate cut early next year is pretty much baked in. Of course, we're waiting on that data, the US GDP. This is the second estimate out later in the day, and of course that Beige Book as well. This will give investors a snapshot of the US economy, and investors will also get a look in on how the US economy is faring under restrictive monetary conditions. We also had a few Fed comments, investors digesting it right now. Christopher Waller, known as a hawk, hinting at lower rates in the months ahead if inflation continues to ease. Meanwhile, Chicago Fed President Austin Goolsbee raising concerns about keeping those interest rates too high for too long. Now, this is all interesting given it's the first time a Fed official has discussed the possibility of a cut. Well, Chris Vecchio joins us all the way from New York, Tasty Live, part of IG Group. Chris, the main sort of event is Powell, isn't it, though?
It is, and these are nice little appetizers that we're getting in the run-up to the main course this week in Fed Chair Powell's speech on Friday. You noted that Governor Waller comes across as hawkish typically, so the fact that he's acknowledged that it's possible the Fed delivers a rate cut in the coming months is a very important development. It's no different than when we heard Cleveland Fed President Mester say 2 weeks ago that she was unsure about raising rates henceforth. And that was a unique shift in stance because for the better part of the last 2 years, at every single public event that she's been president at, she has said that rate hikes are still necessary and needed. And so there's been this subtle shift, well, perhaps not so subtle shift from some of the more hawkish members of the FOMC that lead us into believing that the Fed feels like their job on inflation is finished. Right now, according to ZQ or SR3 forward spreads, you can see that the market's pricing in upwards of a 40% chance of a 25 basis point rate cut in March, and a rate cut for May is now fully baked into the cake. Inflation still needs to come down some, but as the Federal Reserve and its officials have said many times in recent months, they want to begin cutting before inflation gets back down to 2% itself. They want to glide it down and ease it into there. The way that the data has evolved suggests that we could be looking at a 2 handle in those inflation figures early in the first quarter. And so right now it's all coming in together that, yes, indeed, the United States has gone through what economists are calling immaculate disinflation. We were able to slay the beast without killing the labor market or sacrificing the economy, which, by the way, third quarter GDP just came out, was revised higher to 5.2% from 5% previously.
Chris, the other thing our clients are really crazy about this week is oil ahead of that OPEC Plus meeting. What are you expecting to hear?
Oil is actually really well positioned right now, and this is an argument I've been making in several different circles for the past few days, that oil has some upside potential here. OPEC Plus, whether or not the cuts are legitimate, whether or not the production changes or the quota changes actually are adhered to is another story. When we heard from them last a few months ago about fourth quarter production changes, we were told we'd be running about a 3 million barrel per deficit per day. Instead, in actuality, in hindsight, it's been closer to 2 million barrels per day. So not all member states have been adhering to the production cuts. But one shift in tone, one change in policy that may be afoot is that Saudi Arabia will voluntarily extend its cuts to the end of next year, as opposed to going on a quarter by quarter basis. They'll give us the certainty or remove the uncertainty of how long the cuts will last, at least from their end. They, of course, unlike other states, have the balance sheet to absorb a smaller output level. And so right now, when you look at the oil markets, you have a fundamental catalyst in this OPEC plus meeting. When you look at the charts, technically speaking, it appears a bottom is coming together in either what technicians call a symmetrical triangle or on a 4-hour time frame, an inverse head and shoulders pattern. And then you have the positioning in this market, which is quickly slumping back down towards the lowest levels that we've seen of this year. Managed futures positions are moving back towards the lowest levels that we've seen since 2020, when oil traded negative. So this is a thin market right now. There's a catalyst coming up. You have a thin positioning. You have a technical pattern that all point to a spark plug needed to send oil higher in the very short term. That doesn't necessarily mean we're going back into the 90s per barrel, but it does mean that a move up into the mid 80s is certainly feasible here in the next few weeks.
Thanks very much, Chris. And of course, the oil market also finding a bit of support from that drop in US crude inventories. But of course, as you rightly say, it's we could get a spark from that OPEC plus meeting. Other than oil, the focus will also be on policy comments coming from Richmond Fed President Thomas Barkin, slated a little later in the session. Now, gold prices also in focus as we've seen consecutive rises in the price of gold in the last few sessions. IG's Axel Rudolph is here to update us on the technicals. Axel?
The gold price is really, really interesting because we talked about it since last week and said that we were likely going to head higher again. And so far, we've risen to $2,052 per troy ounce and are being capped around the 2050 area. But we've come very close to the highs seen back in 2020, 2022 and 2023, between $2,070 and $2,082. So that is a really important resistance area which we're gunning for at the moment. And as you can see here, we are on track for our third consecutive week of gains with regards to the gold price. And from a technical perspective, that upward momentum should take us into that resistance area I've just mentioned. Now, if we were to rise above $2,082 per troy ounce, the current all-time high, then it is quite possible that we could, over the coming months and years, rise all the way back up again towards sort of $2,400, $2,500 per troy ounce.
Thanks very much, Axel. Now to equities. I just want to show you General Motors because this is an all-session stock on the IG platform. And we're seeing a spike here right now, up 9%. This is coming after the car maker reinstated its 2023 profit guidance after the 6-week UAW strike. And GM also saying it will boost its quarterly dividend and buyback. This is really interesting given the auto sector in the US has had such an upheaval since those strikes started. GM shares all sessions up more than 9%. The other big story that we're following for you is Amazon and the second-hand market. Pre-love shopping. Clearly, this is something that Amazon is really banking on in the UK and Europe. The UK boss of Amazon saying that the business in pre-loved goods bringing in $1.3 billion, and demand for this is growing, says the boss of Amazon UK. Amazon, of course, has just launched the UK's second chance store. But what's also interesting is this all feeds into the cost of living crisis and the fact that consumers are still shopping but becoming ever more cost conscious. There's a lot of changes coming in terms of regulation as well, both in the UK and Europe in terms of competition and also AI. And so this is likely to also impact retailers like Amazon. But for now, Amazon saying the pre-love market is giving it quite a boost to the bottom line. Amazon has invested some £56 billion in Britain since 2010, including $12 billion in 2022 alone. Now, moving on to another story that we are watching for you. Of course, it's all about the expected rate cut from the US in the coming few months. This is the expectation, which is growing. Let's just have a look at the markets for you as we count down to the open. We're seeing effectively a marginal rise there expected. Same story for the US 500 as well, which is indicative of what the cash market, what the cash open will be. And also just a quick check on US crude there, because it is meandering around the 7.72 mark there. However, we could, if we see further impetus from what OPEC Plus says on Thursday, we could see this move higher if those output cuts are extended. Until then, you can find more analysis from IG on @IGCom or @Angeline on Twitter, on our website. I'll be back every day at 13:30 to give you the latest ahead of the opening bell. And my colleague Jeremy Naylor will be joining you at 7:30 to do the same for the European trading day. This is IGTV.